Hello, traders. This is Greg McLeod from the Elite Traders University, and it's great to be with you here on this terrific Tuesday, the 18th of April, 2017. And I hope you guys had a wonderful Easter break, Easter Sunday, Easter Monday, and Good Friday. And I hope you're refreshed and ready to get back into action. The market never sleeps, the forex never sleeps. However, periodically, sometimes the markets flatten out, and you get a real erratic price action. And sometimes it's just good to stand away from the computer, turn off the internet, and just go out and just enjoy the beautiful weather that we're having wherever you may be. I'm back, and it's Tuesday, and I took that Easter Monday off, and that Sunday and Friday, Saturday off. Just took the whole weekend, about 4 days off, and went with the family. We went to California, and was able to visit the beach and enjoy some California sunshine and some great food as well. So we're back in the saddle, and it's time to make some money. So let's go to this edition of the market map, the Pip and Run Forex Scalping Money Map. And this is our map of the markets, where I show you key levels of support and resistance levels that I'm looking at, as well as analysis of the news that can really get the markets moving, that the institutions and the large players are looking at, and which will probably drive price action moving forward. Now, before we get started, I want to direct your attention to the risk disclosure on your screen, and make sure you understand all the risks associated with foreign exchange trading. And again, for those of you who don't know who I am, my name is Greg McLeod, and I am the founder and CEO of the Elite Traders University. I'm a 21-year trading veteran and trader mentor. I traded options, futures, stocks, and forex, and I'm one of the foremost authorities on short-term day trading and scalping. I spent 8 years as a currency analyst and trader coach at one of the largest retail forex companies in the world, and I spent 16 years as an instructor in public education. So I'm uniquely qualified to teach you how to trade, to show you how to trade, and really give you access to a number of trading tools, as well as some of my student traders who are just killing it, crushing this market. And that's why I can sometimes step away from my computer and allow them to trade for me. And so I want to be able to introduce those to you as part of the Pip and Running Club that you can join, and you can have some of these great talented traders to trade for you as well. Now, I also worked at a prop trading desk and the top tier US bank. I forgot to mention that. But so in this edition of the Pip and Run market map, as I told you earlier, we're going to be looking at levels of support and resistance, key levels for the majors in gold. And we'll also probably take a look at oil as well, and look for possible scalp entry targets. Like, typically, I don't like being in the market for very long. If it's 30 minutes, if it's longer than 30 minutes, it's really too long for me. I like to be in there for 4 or 5 or 10 minutes. And the reason why that happens is because price gets to a specific level, and that at that level, that's where everyone decides they want to change direction, right? So that's what we're going to look at as well. But I'm also going to look at the high impact news events that also could move the market. Because how many times have you ever been in the market and you've been trading and you're focused and you got everything set up, you have all your indicators lined up, you're following your strategy, and all of a sudden, boom, it goes in the wrong direction, and you don't know why, and it happens at a specific time. And it's probably that 4 a.m. news cycle, when it's coming out of the UK, 4 a.m. Eastern time, or 8:30 Eastern time, or 10 o'clock Eastern time. Those are the big movements that you see when those news items come out, and sometimes 9:30 p.m. when you're looking at Australia and you're looking at the Asia market. So you want to be aware of those events. I'm going to point those out to you, so stay tuned. Okay, so let's go ahead and dive into the charts. Now, before we get to the euro and the other charts I'm going to show you, I want to give you the opportunity and the invitation to be part of the Pip and Run Forex Scalpers Club. Now, one of the benefits that we just added, that I just mentioned to you on the fly, is that we're going to give you access to the traders that I have taught or been in my program, and our top traders around the world. That you can mirror. You can actually just put money in an account, and you can have them, and you can actually mirror their strategies and take advantage of their experience. You can earn while you learn. You can actually open up an account and actually have part of that money go toward your tuition so you can learn, and you can have another part of that money going toward your to actually start making some money in the market, so you can earn while you learn. So this new feature that's going to be part of the Pip and Run Forex Scalpers Club is going to be made available to you, and you can have access to this as well as the MyForex Heat Map, which is a powerful tool that scans 71 different currency instruments, and forex, gold, CFDs. So you have access to that, so you can see what's popping, what's hopping, what's dropping, and what's not. We can see at the top of the heat map, we see the pound is very strong, pound yen, pound Aussie, and the euro yen and euro Aussie. We see that the yen is very weak versus the other currency pairs. We also see the European pairs, the pound, the currencies, the pound and the euro are very strong just by looking at this heat map. We can also see what's trending down, and we can see that we have silver's down, Aussie CAD's down, Aussie dollar's down, and Aussie Kiwi is down. So we have our Aussie and dollar are weaker. So just in a few seconds, you're able to ascertain what's going on in the market. Hey, ascertain, that's a big word, huh? One of those 50-cent words. But that's all part of the club, and you get access to a full range of features in MyForex Heat Map. And so you can go ahead and go to myforexheatmap.com, and you can go ahead and type in, and you can get a $1 free trial, or actually $1 trial, not free. It's a $1 7-day trial, so you can try the MyForex Heat Map indicator, and so that is a great way for you to get access to a powerful tool for scanning the market. You can also have access to over $9,500 worth of bonuses, including the Forex Foundation's freshman course, which is a 9-video set. Plus, you'll get 9 additional starter videos for a total of 18 videos. You have access to that. Okay, and there's other valuable bonuses as well, including a 30-minute private coaching session with me, a 1-hour access to my $15,000 Forex Mastermind session, and also a Forex account deposit, Elite Trader University scholarships, and of course our VIP community and email coaching support. And so you can get 12-month access to all this for $199.99. That's for the year, and or you can have 3 payments of $79.99 and be done with it, or you can do $21.99 a month. Okay, so either way, it's all going to save you some money. Now that should say $199 for the year, not $199 per month. Okay, but don't worry, if you click there, it should say $199 per year. There you go. Okay, so it's like, great, $199 a month. Are you crazy, dude? Now here's $199 per year. Okay, that's the best deal because you get the bonuses with that, and you'll also be part of our community. And you're part of the community at any level, but if you want to get all the bonuses, $199 per year, 55 cents. You can't even get half a donut with that. Okay, all right, let's get into the charts. Okay, we're gonna start with the euro, and here I have someone asked me, well, Greg, where are all these red lines? I want to join your system, but this seems really complicated. No, it's very simple. These are just horizontal support and resistance lines. The top lines are basic resistance, think of it as a ceiling of price, and as price bounces off these floors and bounces down from the ceilings or bouncing up from the floors. So I draw these on the daily chart because the daily support and resistance have the greatest amount of statistical data associated with each point. What does that mean? Is a lot of people, big money, are looking at these levels, and price usually turns at these levels. Now I scalp, and I'm a short-term scalper, so I'm not. We can basically look at this and say, okay, this is. We have some lower swing highs, lower swing lows. All right, but I want to see where price at this point. Sometime price came down to that level and turned, and everything starts on like tick charts and 1-minute charts, and then unfolds to the 15, the 2-hour, the 4-hour, and the higher time frames, the dailies and weeklies, right? So it's like a big ship, and it turns just a little bit first, and that's all I want is that little bit. when I'm scalping the market. So once I get a kind of a turn, I can see that this price came down and we made a turn, and so now we're probably going to see some type of a movement higher. So let's go ahead and let me go close this window here, and let's go down to a so we're looking at the we can see that we came down to this 105.68 area. You can have a morning. We have a morning star pattern, a reversal, bullish candle, bearish candle, abandoned baby gaps, and that's what will happen when you get into the holidays. You get these gaps and things like that, and that's why go to California, okay, or go to Europe, or go to Bahamas or Jamaica during those time periods, because sometimes when you have time off is not the time that you should be trading. And that's the thing I tell my traders in my Elite Traders Inner Circle Forex Mentorship and my Pip and Run Bootcamp. Okay, and let's go ahead and drop it down. So what I'll do is I'll drop down. I'll look at this and I'll drop down to a 60-minute chart, and you can see that price it came to, notice how the 200 moving average and this daily support 106.33. We had a couple of taps there, but we have lower swing highs. We have a lower swing high on the 60-minute, and then we had a another lower. This was lower than this previous one, and we have another one that's lower than the previous one there. But we do have higher lows here, so we have this kind of a triangle, kind of a breakout. And usually when we have this type of a indecision kind of a point, there's usually a decision. Maybe this is some type of news that's going to come out this week, and we'll look at the calendar to see why are we oscillating here? Why are we bouncing around in here? What's going on? What's going on? All right. So, but the key level here is 106.33, top level 106.57, and I'd like to be a buyer if we get a bounce from 106.35. We come back and retouch this, forms a double bottom. I'd love to start scalping up from here and scalping up to this 106.57, right? And if we suddenly break out and close above 106.57, I'd like to see a push up to the 106.80 area. Okay, so I'm looking at double bottoms or close to double bottoms to look for these trade setups to go forward, and we can drop down to 5-minute chart. There's no decision to be made because we're not near a daily support level. Okay, I want to trade off those levels when I can. Okay, at least if we get like 90%, like this one came right to that level and turned. Beautiful. It broke down south, retested the top. This is a daily line that's been this line has probably been up here for a really long time. I drew a lot of these lines back in January or into January, February, and so these lines have just been in place. This one might be a more recent one because we made a new low, or actually a swing low that was a daily low that was higher than the previous one, and so we drew a line across that, a support line. So we're stuck in the in between here. So if let's say we came back to 106.57, did not break but turned, then we have like a double top that I would like to short from this line. But right now we're in between lines, so this would be very simple to see that there's no trade here. Let's move on to the next pair. Okay. I'm using the top-down approach, and I start with the daily chart because that's where that's where those big lines, those are the big lines in the road. This is the map. Okay, lots of lines, yep, but I'm only looking at the ones where when price gets close to those lines, this is what I'm looking at. Okay, and I was looking for this to go higher, and it went lower. But what happens, it bounced, double topped at this line, and then dropped down to the next line, and then dropped to the next one. Okay, but we can see what's going on here is we made a low, now we made a higher low, and we've made another higher low. So we have a succeeding higher lows, but we have not made a new high yet. But this is wedging out to be something where we can see a nice little trend line break, and this may continue to go even higher. Yeah, And yeah, so we could see this break out and maybe even move. We're breaking out even now, and let's go ahead and move out to move down to a 60-minute chart, and we can see price broke out, broke down like it was going to do something, dropping lower, but now we might retag this old and look how it's moving as we're even speaking right now. Why I'm recording this a little late, it's about 2:55 a.m. So want to get this out to you today. And we've got this kind of a topping formation where we are making we made a new high, we made a higher low, and a break above 25.95, or the 26 whole number round number. You can see a shot back at 26.16, and we could probably break higher. However, we break this low down here at 25.48. Look for a move down to 25.51. So we can draw a simple trend line across the lows here, and look for something there, because we are at a daily. We're above a daily. We're actually right now breaking above a daily support line. Okay, our daily resistance line. This was resistance. Price broke down, came back up, broke above, came back down again, made a higher low, and now it's back above this daily. To see how it's broken above this daily resistance line. And so it's a 60-minute chart. Might have to go to like a 5-minute chart. This is pretty active right now, and we can see that we didn't quite get to we didn't get down to this level. So when we don't reach, usually the price will bounce from a floor to a ceiling. Now let's say price breaks down but doesn't get to a floor. Well, that's telling you buyers aren't going to wait for this to drop. They're really eager, and they're supporting it midway here, making its own little subfloor. I just don't want to get into like putting extra lines on the 5-minute chart, and it could get really, you think this is confusing. Wait till you get to a lot more lines on 5-minute charts. But there's a nice little 5-minute support here, and I know Adina, she puts little intermediate trend short-term support lines, and so it's like we had, actually this was a daily support resistance line, and it was just broken. And so we'll see if price can stay above this area. 257, we're going into the London Open in about an hour or so, and so we could see price come back down. We'll see what will occur here, but I mean, this was a nice little scalp from 72 up to we got up to 86. It was good for about 10 pips on the break above that, so that was pretty cool. All right, let's keep going. Look at some other currency pairs. Again, top down approach. We're going to start. Let's do Canadian dollar, and lots of things going on there. Where price, we had this triangle that last week I was telling you about, and we broke out. Yeah, sure we did, but we didn't get to the potential target. We're looking at 35.38, but it did get to a couple levels of resistance, and then turned and then dropped. Okay, and in fact, we had a long wick that looked like it could turn into a morning star, but we never got that. In fact, price, what happened is this long wick, price broke that wick. Okay, ideally the trade would have been a break above this high 34.26, to actually show, but it never did, and it broke a low. And so the breaking of that low, and we broke below daily support, and so now we came down to that 32.57 line. Price came up, and look, it wicked, came back again. Now we're just hanging in there around that 33.22 area. And with the price of oil kind of undulating around, and OPEC, you got Iran cheating on the supply, on the quotas and stuff like that. Also, 11 new U.S. oil rigs coming online. All that's affecting the price of oil, and the price of oil is correlated closely to the Canadian dollar. So the Canadian dollar is not on its own. It's very closely it closely monitors or matches, correlates with oil. Now here's a down to the 60-minute view. We can see that price came down 32.57, came really close to that zone. Look at that V reversal right there, break above the daily support right there, and we V bottomed off that right into the 200 simple moving average, and now we're wedged between this 200 simple moving average, which comes in about 133.09, and also the 133.22. So we've got a little bit of a little sandwich going on there, a little ice cream sandwich. You got a little daily support there, a little 200 simple moving average right there, price stuck in the middle. We need a break above that, like 133.40, and then we can see a target of 33.58. However, we break down below say 32.11, look for a move back down to 32.82. Okay, so that's how we map that out, mapping out, pip and running the map on the CAD. Kiwi dollar. Let's take a look at Kiwi. NZD for those of you from the who speak King's English there. Let's go ahead and go to the daily, and we'll work our way down, and we can see we have a nice double bottom there that's clearly seen on this chart. However, the double bottom target is way up here at 73.80, and we're nowhere near that. And, in fact, we did a major pullback off the 200 simple moving average around 70.86, pulled back down to support 69.50, but we wicked down to almost got down to this level. In fact, now see what happened here. We have a new line, a new wick that actually broke down and turned. It did not touch the other one. This is where I would put in a new line. Okay, I don't put them in that often, but sometimes price, it filled the gap. This gapping price so away. So we just we have a candle on either side. We have a candle on either side of this one too. So we have two levels of support that were recently created. Okay, now this the more. Now, you may say, well, Greg, seems like it's a line in every price. Say, no, when you drop down to a smaller time frame like the 60-minute chart, you can see that we've got this where price, how this all spreads out. And we can see the price dropping down to 69.11, coming back up, pulling back down. And I'm not putting a line here. This did not happen. This happened intraday. Did not happen at the close of the day. Okay, this turn happened. This line was created at a turn during at the end of the day, the close of a daily candle, and so we can see price respected that and turned from it. It hit it twice, and hey, knocked 2 times on the ceiling if you want me. It's not Tony Landon Don. It was knocked 3 times. Only knocked 2 times this time, and it came back. It didn't. Buyers stepped in before we got down to 69.95, but there is whole number round number support there as well. So there are people coming in there on that whole number round number to support price. Now, this is a strange pattern. I'm not really worried about the pattern because I really want to do is I want to be a buyer at 69.95. That's support, okay, and I want to be a seller when it gets back to 70.33. And if it closes below 69.95, below a hold number, I want to see a push down to 69.70, okay? Or at least taking half that, because between 69.70 and 69.95 is, 25 pips. And if I can grab 13.5 pips on this, so be it. But right now it's in no man's land, stuck right in between, and I only want to take them at the red line, okay? I want to take those trades at the red line, and that was perfect, ideal trade at the red line. And that one, we can look down at the 5-minute chart. We can take a look at, but we can see those red lines get really far apart. I mean, bam, we hit the red line, turned, nice, and we're short of the red line here. Now, usually we move from red line to red line, so you could say, well, Greg, it didn't come here. Maybe it will go down. It could. All right, and maybe it's a pause. Maybe this is a 1, 2, 3, 4 consolidation and a 5 drop maybe to 69.95. But right now I wouldn't do anything because it's not at either red line. Okay. All right. Let's keep going. Let's go to, we looked at pound dollar already. Let's look at Australian dollar, the Aussie. Let's take a look at the Aussie daily, and we can see this was that was a nice double bottom too. Came really close to the the double top or double bottom target was hit, and now we were kind of consolidating back and forth in a range, very congested area. And I'm going to get rid of some of these lines here without. I have to be careful not to get rid of my support and resistance line. I really don't like putting on fibs or anything on my master. This is my master chart for my Fibonacci's and stuff like that. I mean, for my I'm about to go down to let's drop down to, so I can get rid of these lines here. Drop on down, and I had a number of things I was looking at. I was looking at price to probably get back in here, and it almost did. It reached into that area a little bit, but not quite. But let me go ahead and see if I can remove this line very carefully. And it's like, yes, gone. My magic eraser. I remember not to use these charts I use them for my reference, but I don't plot anything on them other than the lines themselves. That's the habit I try to do, but you know how that happens. But here's Aussie. It's taking a bath. We've got this lower swing highs and lower swing lows, rallied up to the 7609 area. And okay, I'm gonna break my rule right now. I'm gonna put a fib right here on this, and we can see that we rallied up to the 618, and that 618 was a major turning point. 7609 was the daily resistance area, which tied in right into the 618, 7603, 6 pips apart. And man, what a U-turn! What a great area to get short. And so we rallied up to that line, came back down, and let's zoom in and see where it mapped this out. Price dropped down to the 75.84 area. Look at that. Right here was the congestion zone. Price bounced off that, broke 1, 2, 3 daily resistance lines, then came back down. 1, 2, 3. But now it's consolidated 4 candles in a row below the 200 simple moving average, right? And it's acted as that sandwich of support between the daily and the 200. Price broke down, and look at that candle extend down. And we probably see a reach down to about 75.29. Now, pound has been very strong. Aussie's been very weak. If we did strong weak analysis on that, and I know I'm gonna throw this chart in for you. Now, again, Aussie, I'm looking for a move back to 75.29 as my target. If we stay below the 200 and stay below 75.58, a target of 75.29. However, a close above this area, we can see a move back to 75.75. Okay, so that is what we're looking at. All right, let's. I'm going to take a look at pound Aussie just as a bonus chart that I don't normally look at. On this program, and I probably don't have any lines on there, but this is where you use strong weak analysis just by saying, well, pound has been strong, Aussie's been weak, pound Aussie should be off the chain, right? And certainly it is, right? In fact, we can probably look at the MyForex heat map and see that the pound Aussie is the number 2 or number 3, actually the number 2 best performing currency, right? And the 3rd best performing instrument, up 1.02%. Okay, pound yen follows at 1.01%. And so it drops only up a percent. Still, that's huge. That's huge numbers for the for this pair. Okay, and we can take a look at now. That tells you something, because if it's going up, it means that people are afraid. I call it the Euro Aussie and Pound Aussie are my Armageddon pairs, and when we see major spikes in this, and with a rocket launch from North Korea, possibly American or U.S. Cyber attack that actually blew that rocket up, and escalating tensions, we could see this move way up. I mean, I'm talking about back into the 200 area. This gap down from Brexit, I see this being refilled, and this could possibly be a big move to the upside on the Pound Aussie. Again, I'm throwing that in as a bonus, but as long as we have geopolitical unrest, upheaval, missile launches, earthquakes, and all French elections, and all kinds of things upheaval, we should see a higher Pound Aussie, because it's a risk averse currency pair. Okay, that was the bonus there. But let's go to we still have more to go. Let's go to looked at Canadian dollars, look at the Swiss franc, and that's why I like going to the Swiss franc and then the Japanese yen. The Japanese yen is here. Let's do Japanese yen, dollar yen. And the dollar yen has, we're going to remove that. Okay. So dollar yen has plummeted. I mean, it has an uptrend still. And we're finding making some type of bottoming pattern at the 108.13 area. Stopped right on that line and turned. And I'm just going to drop down to a 60-minute chart. But, I mean, we have this uptrend, and we have this really deep wedge. Okay. And this deep wedging pattern is indicative of a bullish trend that may continue. And we're sitting at the 50% retracement. We could probably get down to 106.41. That's a nice correction. That's a 50% correction. Usually prices come up and pull back to 50%, and that was a 50% line that we came up to. Let me put it back up there for you. Oh yeah, 108.87. Okay, 108.87. Let me get rid of that. Okay, so we've got this here. So let's zoom in and on these areas of support and resistance. And when we zoom in, you can see how the lines are spaced out. Okay, now here this was a major decision point where price tried to break out. If it could close above that, I was signaling at target 112.23. However, it stopped right on the 111.52, that line, and then dropped right down to that line where I drew that arrow. 110.50. See it? Isn't it cool how the plan works out? Then price, look, if you bought it back again to 110.52, came back to 111.50 again. Dropped back down to 110.52. Couldn't you play the range? Like a range trade, right? This is a nice range trade. 110.08, double tap that 110.08, came back up to 111.52, and dropped back down again. However, if you try to buy this again, it's like 1, 2, 3, 4. Not this time, no more. 1, 2, 3, 4, and no more. Break below South Side 110.50, drop down to 110.08. And went down 944, and consolidation at 109.44, big drop down to 108.77, and drop down to 108.13. Now, one of our survey questions in a Pip and Run chat room in our club, in our community, was, were we going to hit 112 first or 109 first? Well, we actually hit, we did hit 112. Not quite. You know what? Yeah, 112. Yeah, we did. We did 112 first, and then we hit 109, and then we hit 108. We kept going. Okay, but if we drop down to a 5-minute chart and see where we are now, this is interesting stuff here, guys. We are right here at 109.17. We've bounced. Yeah, we missed about 5, 10, 15, 20, but this is a daily resistance. And so we actually see price coming back off here about 20 minutes ago, 5, 10, 15, 20, 25 minutes, and rejection from the 109.17 area. We probably have a good shot back down to 108.75, and that would represent about to about 28 pips of profit if we were to take that trade with our stop. We have a stop just above the 109.17. This is how it would look like if we were to do if we took a short trade, on an entry like that, and I had a stop somewhere above that, like that, and our target area maybe like that. So that's what that trade would actually look like. In fact, I'm going to go ahead and screenshot that, because it might be a pretty good thing to post. Okay, in the chat room. Okay, so that's a dollar yen trade that we're looking at right now. A short, currently at 109.01. We could probably see this drop to about 108.75 or so. Okay. All right, exciting stuff, guys. If you like what you're hearing, feel free to share this. Send out a link to somebody and say, hey, you should join the club. Join the Pip and Run Club. It's a lot of fun, and you'll learn a lot too. Hopefully, you're learning a lot, and I'm not boring you. That wouldn't be fun, right? All right, Swiss franc. I want to look at the Swiss franc. It's one of the majors. I don't necessarily trade a lot because the Swiss National Bank, they have a tendency of intervening and doing stuff to this pair. So I kind of stay clear of it. And so CH, there we go. And let's go out to the 50,000 foot view. Just to get an idea of how the pattern is moving. And this is how I was looking at this as some type of a double top formation. Where price would come down. It's just taking a long time for price to come. I mean, I was looking for this to move here, but then it just started taking its own sweet path sideways. And if we can zoom in on that, the old target I was looking at for it down here, but it's taking a long time to get anywhere near there. In fact, we came down our low. We came down to, this is our new, actually we had a new swing point. So this is where I'm going to add a new line right there. Okay. So I don't add them that often, but you can see I had to add one because sometimes the wicks are, and I could add one there. That wick came down just below, and I could basically now I'm going to come down to our 60-minute chart with those daily. These are daily closed lines of support and resistance, and you can see this has been a real mess to trade. We got a little overshoot there below 10023, and then price shot up and tagged 10066 exactly, came back down, tested 23 again, and just kind of tested the 23 again, and now we're below the 200 simple moving average, and we're stuck between a really sloppy, ugly range. And unless this thing closes above 1.0042 for a target of 10066, which is what 24 pips. Okay, 24 pips, maybe if we can get again a break above this 200 simple moving average here at 1.0044. Okay. Now, if we break below 10029, since we're below the 200 simple moving average, we can maybe see a move down maybe the figure 100, the figure. Okay. All right. So that is that should do it there. And I also wanted to take you to gold. All right. And gold hit almost $1,300, $1,290, and so it's been screaming. But and you can see we actually broke. We had double top, and it broke, and came down, and then we broke to a new high, and we broke right into this range, into this no man's land, where we had a long wick here, and but because of the nature, look at how right in here we had this gap down. Notice how the strange candles that occur in this zone, this 1265 to 1308 zone. Now there is I was looking at the Commitment of Traders report. A lot of the institutions are selling gold. And so lots of the leverage funds are, the retail traders are getting long gold, and a lot of the big institutions are getting short gold, and they're also getting long corn. They're getting short Aussie, short gold, and they're getting long corn, long wheat. And there is a negative correlation between corn, wheat, and the corn and wheat complex, the grain complex, and the Japanese yen. Japanese yen traditionally weakens when the grain. Now, even though Japanese don't really consume a lot of grain, I mean it's for soy sauce, I guess, but not like wheat and bread and things like that. But there's just maybe it's one of those correlations that are just they're not really correlations, more like there's a name for that, and it slips my mind. But it's when something is it's like coincidence. They just happen to move that way, but there is no real connection. And it could be maybe the U.S. dollar falling and maybe the yen weakening, that kind of thing, maybe. But anyway, we can see that this double top did not hold, and then price broke to a new high and broke right into that empty zone of space. However, this could be a last gasp. If you took a Fibonacci from that wick down to the low, we are at a 78% retracement zone right there, which is a typical Fibonacci retracement. And we came down, retraced, and so we look for a price to come back down hard from this area. So that's what we'll look on gold. In fact, let's drop down to a 60-minute chart and see what's going on. And we can see price coming up to that 786 retracement and drifting down. And if you took a trend line across that, we broke the trend line. Now, if for the bears if the bears lose control at above 1295, if price managed to rally above 1295, we could see 1308 and this daily resistance level coming into place. Okay, so what you want to do is like draw a trend line across the top like that, and if you want to minimize your risk, you can say, I might want to, let's say I want to take this long, and price broke, this is what I could possibly, the scenario that I could look at as a potential target zone here, like that, okay? Because we're not near any red zone, and the candles are acting kind of weird here. So, if just we're looking for something, a break above this 1284, we're looking at the old high 1295, and then up to 1308. However, we break below here, we can keep going down to 1271, then 1265. This is where the daily support comes in, and then there's 1260 and 1244. Okay, and I'm going to take this fib off. Cut. Okay, and so now we have that 1251 was support, was a major support level where a lot of stuff happened right in that zone. Okay, so that is going to be it for our gold, and I actually want to show you the U.S. dollar index. And you give me a second, we'll go ahead and I'll bring that up. Yeah, I wanted to bring up the indexes up. Here's the U.S. dollar index. A lot of consolidation. This is a daily chart of the U.S. dollar index. Lots of 1, 2, 3, 4, 5 days of consolidation. Usually 5 days of consolidation, we get some type of a breakout, right? 5 to 7 days of consolidation, we could see some type of a breakout. And it can go either way. It could we could see a rise up to 155, and because we have an A, B, and maybe a C extension that may be on the way. However, we could break down and go lower. Okay, but we have a higher low, and we need a higher high or a lower low for this to pan out. Again, it's a little indecisive there. The next thing I want to look at is U.S. oil, the CFD there, and we can see that we've just been undulating around here, double top there. But looks like we had a correction, and then looks like this wants to go higher. You know, we have higher swing lows, higher highs. This lower high maybe could be bearish. Um, you know, but we really have to pay attention to what's going on in the news. If there's more countries cheating on their quotas, if there's more rigs coming on, a lot of oil shale and new rigs coming on, that will drive this price down. And then I want to take a look at the SPX 500, which is the CFD for that. And we can see that we've had a little bit of a correction off of our highs. We had it about the 2401 area, all-time record high, and now we're double bottoming here. Maybe if this 2321 holds, maybe we see a move higher. Okay, it's consolidation, it's flattening out, and so maybe we see a break. Maybe this if we see a line maybe like that, we have a little trend line, double bottom breakout, we can see a retest at the 2400 level. All right, let's get into, I want to go to the into our, hey guys, let's get into our economic calendar here. And it's a shortened week. I didn't cover Monday because it was Easter Monday. A lot of markets were closed, a lot of Iraq price action. I find out that I trade much better when I'm not trading holidays and I'm just kind of cruising along the coast of these various beautiful places to travel. And I'd love to, next time in your area, let you know where I am, and we can like have coffee or something like that. Love to have fun with the people I teach and train, and are members of the Pip and Run list, and who are part of the Pip and Run club and our inner circle as well. Okay, so let's take a look here. 8:30 a.m. This morning, April 18th. We're going to have building permits. The U.S. expected to rise from 1.22 million to 1.25 million. Should be bullish for the currency. Should be bullish for the U.S. dollar. However, sometimes we see those things can backfire and work the opposite. Now, this number was revised up from the previous number of 1.21 million. So this is very bullish to move from 1.21 to 1.25, and the previous number is revised up to 1.22. So that could be a good thing as well. However, if you look at the number, I know I don't normally look at the orange impact or the medium impact numbers. The housing starts is supposed to fall from 1.29 to 1.25. So this might be a wash when you have a good number for building permits, which is actually more future. The permits it takes so long to get a building permit. Believe me, I tried doing some stuff in California, and it takes a long time to get a permit. So the permits are kind of like foreshadowing what could be happening down the pipeline, and housing starts is when they actually got the stuff in the ground. So this is probably more backward looking. Housing starts more backward looking. Building permits more forward looking. And so we'll see maybe the building permits, and that's probably why it's red. It's in high impact. Right, Greg? Genius. All right. Yeah, so it's more high impact because this is future, and there's more of these things coming down the pike, and they're building stuff everywhere. Now let's go down. We have GDT price index coming out of New Zealand, and those guys aren't going to give you a time when they're going to announce that. So if you're trading Kiwi at the time, be careful. Okay, let's go down. Wednesday, April 19th, we have crude oil inventories. Real light news month, and usually at no news period that we're in, that's where the markets sometimes get wishy-washy. Going into the second quarter. Crude oil inventories, previous numbers negative 2.2 million. There's a draw. Now, if we have we want to watch that number, because if we trade oil, if you trade a CFD, or if you trade the Canadian dollar, this number could a positive number, a big number means that we're not using much oil, and that could be negative for the Canadian dollar. Okay. Now we look down to 6:45, And New Zealand, they give us their consumer price inflation number. No, Greg, is consumer price index. Well, the way I remember it is I is inflation, right? And a rising inflation rate is good for the currency. So we look at this. The previous number was 0.4%. It's expected to rise to 0.8%. That could really cause the New Zealand dollar to fly. Fly, Robin, fly. Up to the sky. Okay. That was a disco song from the 70s, and many of you don't remember it. It's okay. It should stay there. Okay. All right, CPI. Again, New Zealand CPI could be very bullish for the New Zealand dollar versus the US dollar, or any other weak currency pair you want to, or weak currency you want to pair it with. That's what I mean. All right. 8:30 a.m. Thursday, April 20th, we got the Philly Fed Manufacturing Index, especially the fall from 32.8 to 25.6. That could be very bad. Now, Philly Fed, that's the Philadelphia area, Philadelphia, Pennsylvania, and the manufacturing index. Maybe people say, do we really manufacture anything anymore? But we do. We manufacture a lot of things. So this number would be bearish for the U.S. dollar. Now, we have unemployment claims, which is a weekly number that comes out, and it's very volatile, but is expected to increase from 234,000 to 241,000. Now, usually big numbers are good. No, this number is bad. More people who claim unemployment means there's less people who are being productive, who have jobs. They're dependent on the government for checks and financial assistance. And so this number is expected to rise. So that's a negative on the economy. The economy is slowing down. It can't create the jobs necessary to employ these people. So the dollar may suffer as a result. Okay. Now at 11:30 a.m. on Thursday, we have the Bank of England Governor Carney is going to speak, and at 11:30 and 12:30, and the British pound will be in play majorly when when he speaks. And so it didn't say what he's going to speak about. I can probably find out some more details here. He's due to speak at the Institute of International Finance Policy Summit in Washington, D.C. Wow, he's going to be in the United States and speaking. So we're going to watch that pound versus U.S. dollar exchange rate. It should be rocking and rolling at 11:30 a.m. Eastern time. Okay, and then he's going to speak again at 12:30. He's going to have a lot to say, right? And he's going to participate in a panel discussion at the Bank of France event in Washington, D.C., and audience questions are expected. Now, usually when they start asking those questions, you don't know what the questions are, and they're not scripted, so that can provide a lot of volatility in the currencies. But the thing about it, if you've got the daily support and resistance map, you've got the numbers, and if price gets around those numbers, you're going to know how to trade it, okay? And remember, you can contact Kara at EliteTradersU.com if you want to schedule an appointment to talk with her and how to build your business moving forward with education or the tools and services we offer and provide at the Elite Traders University. And we love to hear from you. Just send an email and say hi, or just if you want to sign up for our upcoming classes online, you most certainly can. We also have videos available as well. All right, moving right along, we have retail sales out of the UK at 4:30 a.m. Eastern time. That's Friday, April 21st. That's our last, actually, it's Friday. It's the end of the week, right? The retail sales month on month is expected to fall from 1.4% to a paltry negative 0.3%. And I don't know, you guys, I think Simon and Terry and Dean, all you UK guys out there, start buying some stuff and let's get the UK economy rolling. Let's make some pips and get some GDP going there, right? And this could actually be a negative if this comes out as remember, these are forecasts, and sometimes they're like the weather. They forecast rain, you bring your umbrella and it doesn't rain. Or they say, hey, it's going to be sunny. You have a picnic and then it rains, right? So some of these forecasts can be kind of screwy like that. So, you take them with a grain of salt, but, make sure you got the salt shaker nearby too, and some pepper and mustard and, some HP sauce. It's always good to go on stuff. All right. So anyway, I ramble on. But look at this number. If that number comes out better than expected, now this number can be completely wrong, and they usually are. Let's say it comes out a blockbuster like 2%. Then that pound is going to go nuts. It'll go nuclear, right? And you've seen that where, oh, it's negative. I mean, negative. Everyone's selling, right? And then boom, a big positive number comes out, takes everyone off guard, and maybe this is some type of fishing expedition to get people to get on the wrong side of the trade so they can take it higher. Okay, the way the pound's been moving, I doubt that this number is true, but that's just my 2 pips. Okay, trade what you see, not what I say, and you'll do fine. All right, 8:30 a.m. We also have CPI, consumer price. What does the I stand for? Index. No, inflation. Okay, no, it stands for index, but again, inflation. High inflation means the currency is going to go higher, usually because the banks have to raise their interest. Central banks will raise their interest rates in order to lower inflation. They don't want to be behind the 8 ball where prices are going higher for food, for clothing, for gasoline, runaway prices, and people can't afford anything, and they start shouting in the streets, "We can't afford anything, help us!" And then the central banks will have to raise interest rates in order to slow down the rise of prices. Right? So anytime we see price rises, on one hand, it shows that the economy is growing, but if they get out of hand, then it spells disaster for the consumer. So they want to manage this inflation by hiking interest rates up in order to keep these stabilized. Now this is double. So this will be very interesting if it comes out like that. That could really send the Canadian dollar higher. Okay. Now we do have some flash manufacturing PMI at 945, but that's 53.3 versus 53.9. That could be bullish for the U.S. dollar, and those are low impact. Existing home sales probably a bigger one. 10 a.m. Is expected to rise from 5.48 million to 5.61 million. Existing home sales, okay, building permits, all those things combined together. Housing is a big driver of the economy, and seeing these kind of good numbers like that could in fact be good for the US dollar. However, if we get a negative number, let's say it comes at 4.7 million because of the weather or something like that, or because a lot of the immigrant workers who built houses are no longer in this country anymore, maybe these housing starts actually drop. That could be this, it could spell a lower US dollar. So we could watch what that number is and trade what you see how prices are acting at the lines. Okay. Now with that, I want to thank you for joining me and remind you that you can become part of the club, the Pip and Run Club. You can join for just $1 for 7 days. So just try it out, see how it is, see if it I post trade of the day. We organize each one by US dollar. You talk to people about the euro, talk to people about the pound, talk to people about the Aussie Kiwi, and there's all kinds of people in the room who are talking and chatting like that. We're growing, and we're growing our community and getting larger and more vibrant and lots of things to share. I share expert analysis, and it's a great place to meet and talk to people. Okay, all right. So we'll talk to you soon. Remember, the tip and run, never buy and hold, always pip and run, and we'll talk to you real soon. Cheers. Bye-bye.